What's up, guys? It's October 17th, 2024. Had a range day in the markets. We're trading at range highs. Daily chart looks cool. Bulls are getting followed through. Big tail we traded past October 14th high and reversed down. Bulls are trapped. Bulls that bought above here for the breakout are trapped now. The overnight session had a crazy rally. Like, it was such a nice looking rally. This is something I would have liked to trade. Did you guys trade the overnight session? Did anyone catch this? If you did, amazing. Anyways, mate, if bears sell this 1-to-1, it's pretty close to the EMA. EMA pulls up. Could be a target for bears. Bulls obviously want a fall. Oh, okay, so I got the hiccups. Of course I got the hiccups. I just started the video. Why would it be any different consistently? Whenever I start this video, I have to cough, I have the hiccups, I start sneezing. Yeah, so where was I? Bulls got their 1-to-1 here. Can go for the body. Tail is just shy. But no bear gap, no bull. We still got a bull gap here. You know, first bear bar got bought. So you could buy the low of the bear bar and you'd make 1-to-1 before. So this is interesting. Okay. This is a good looking bear bar, but bulls who bought this made 1-to-1. Bears who shorted this lost. If this is such a good bear bar, why did the bulls make 1-to-1 before the bears, right? The bulls made 1-to-1 first. So that's something to keep in mind. Again, lower high, lower high. Let's see if they got 1-to-1 here. 3 bear bars. Put it to the top. 1-to-1 is met, man. You got to respect the 1-to-1s and the probabilities right there. That's pretty tight. Big gap up. Bar 1's a bear bar. Bar 2 is a bear bar. I think it's strong enough to get follow through. 3, 4, and 5. We have a bull macro channel, but this bull macro channel is still within the range of this bear bar. So we have to ask ourselves, how strong is that? I think shorting this was a good short. Getting short here is a good short. You can make 1-to-1 of this bar. You can make 1-to-1 of this bar. Leg 1, pull back leg 2, pull back leg 3, pull back leg 4, leg 1, pull back leg 2. Lots of overlap. Where's our favorite tool? You got short here looking for 1-to-1. You have to sit through a very deep pullback. I think you should definitely be taking profits around 9 and 10 if you're holding short. You can always get short again. Or a new 1-to-1. 12, 1-to-1. Not necessarily met here. The price is shrinking. We're starting to get a wedge bottom after a gap up. So let's see, can we get 1-to-1 here? Again, it's a bear micro channel, lots of overlap. We short the high of the first pullback. 1-to-1 fails. So bears are failing to just make 1-to-1 of these bars. Of course, you could scalp smaller and make 1-to-1. Look at 19. Bar 19 is a nice looking bear bar. Bar 20 trades 1 tick below. Excuse me. Bar 20 just trades 1 tick below and reverses higher. Bears are trapped. They never got a breaking. They did get a breaking event. If you hold through this rally, you're a monster. I don't recommend that. I think you should just get out when 20 starts to turn up. Leg 1, pull back, leg 2, pull back, leg 3. Bears get a 2-legged pullback into the EMA. Leg 1, pull back, leg 2. And the market goes sideways. When the market goes sideways, the market cycle is resetting. We're looking for a breakout. Think of a gun shooting into a box. This is Ollie's method. When you shoot a gun into a box, we shoot a gun into a box, it has momentum. And then generally, we will see a continuation of that. Let me delete this. Put that there. So this is what I'm talking about. Let's say we have momentum trading into the range, and then we start to go range bound here. Depending on how short this range is, the momentum can carry over and we can look for an upside breakout. Let's take this same idea but apply it to the downside. We have a sell-off and a rally, big up, big down. But there's more selling pressure. There's a bear gap open here that stayed open. from the high of this bar like that. You can see bar 31 tested the high. So we take this idea with the sell-off and we get that delayed second leg. In ranges, you can expect delayed second leg, sell-off, rally. So now I'm talking about this rally, and we start to oscillate. The pressure kicks us back out. That doesn't always mean it's going to go that way. I'm just saying, like, if the box is small enough and the momentum and context is right, we could be looking for that second leg. I traded, this is kind of where my money was made today, all day. I was break even. I caught this rally, got a little chopped up looking for like 2, and then made the money back. I didn't catch this leg down, but I'm not looking to catch the first leg. I'm looking to catch the momentum after the first leg. The second legs are the highest probability trade. The reason second legs are the highest probability trade is because there's 3 types of traders looking for it. There's 3 types of traders looking at it. There's traders who are trapped. So the bears are now trapped here. There are bulls who front ran this and took the chance and bought these lows here. And then there's the third set of traders, which is us, the traders who want to join the move. So we have 3 types of market participants all engaged in the second leg, which is why the second leg becomes the highest probability trade. In some instances, it can be 70 to 80%, depending how strong the micro channel is leading up to it. That's a different type of topic, though. But we do trade probability, so that's something to keep in mind. So we see the strong breakout 2021. We want to go for a second leg here. Buy that. It's met. Voila. That was a little. There we go. Wait, what have I done? 2021. It's met here. We see another strong micro channel 23, 24, 25, 26. We have a gap too right here. This gap shows us that bears are trapped now. Limit order bears that were trying to sell the previous swing high are trapped into a bad trade. They buy back shorts. Bulls that buy this are in profits and they want to press their positions, and we want to join the momentum. 28, 29, 30. I got filled on the high tick of 31. I put it 1 tick lower. Actually, wow, I did get like, so if I didn't put it 1 tick lower, I would have missed my exit. That was nice to know. Leg 1, pull back leg 2, pull back leg 3. Again, I focus on leg count and market cycle. 2, pull back leg 3. Leg 1, pull back leg 2. Market cycle is resetting. It's breakout mode. Price is somewhat coiling up too. We have a higher low and no new high. So it could be some sort of a triangle. 53, 54, 55. Bearish breakout. 56 breakout that gets followed through. How the bears got trapped here. We have limit order bulls that have laced this bottom here with orders. So what I mean by that is this is where they're placing limit orders at the bottom of the range. Here. They get trapped 55, 56. Bears have a gap that also stays open now. Now we're looking for a second leg. 57 is a good scalp. It's the first reversal of the strong breakout. Scalp 1-1. Bang. I meant 1-1 to 57, by the way, not this bar. We are shorting into support, so that is something to keep in mind. We get a 2-legged rally. Leg 1, pull back leg 2. I shorted the high of 66 right at the EMA. It pulled back and I shorted the low of 70. And I got out before 75 turned up. The reason I got out is because it could have been a second leg trap. We're trading right above the EMA late in the day. I'm not too fond of trading this late in the day. If you want to ask something funny thing, I think today was easier to trade than yesterday. I did have a hard time trading yesterday because of, not necessarily because I couldn't read the price action, because the sell-off threw me off. This sell-off, it threw me off around this price action, thinking it was a reversal. I thought 28, 29 was going to be a reversal leading to yesterday's low. Bulls kept the gap open. And then they rallied. Small pullback trend, trapping traders, trapping bears out. Because small pullback trends, it's a small pullback trend. It's a small pullback trend or an endless pullback, because this deserves a second leg and it never happened. So just like myself and other bears, we held our shorts thinking we were going to get at least a relief below 1 tick 15. My target was here. And that's what creates the small pullback, is that we had to buy back shorts. So that's kind of how small white trends take place, and that's why I think today was a little bit more straightforward because it was range bound price action. We could say 5 is the high of the range, 20 is the low of the range. When we're in the range, we want to do nothing. No, we want to trade. I gotta fix my fib tools. I don't know what numbers I've got here to. There we go. So if we're trading in a range, sell, buy zone, and that would work. You could scalp the buys here. I'm not into limit order trading at the exact moment yet, but range market price action is meant for limit order traders. So just go over the gaps and the legs, and then we'll call it good. Got a gap. That's a zero height gap. Gap here. Again, the gaps are closing, so that's an indicator that we're in a range bound price action. That's not a zero height. It's so funny. I remember the first time I studied Al Brooks, I was like, I don't understand gaps. The section in the Al Brooks course is so small. I was like, it couldn't be that important. Little did we know, 2 years later, I'm basing my entire system off second legs and gaps, because once you understand gaps, and I'm still learning gaps, I'm not professional by any means. They're just so good. They just help you. They help me at least, and I hope they help you too. Oop. So yeah, that's not the best gap actually. The high of 38 is 650, the low of 40. Okay, so this is a tick gap, yeah. There are gaps, and now let's find the one-to-one trades. I think everyone was looking for one-to-one of this. I think that was the trade of the day. However, it came so late. Wow, it was met if you could catch the high here, but I don't know if you caught that high, that's great. I'm happy for you. However, I think more of us would be inclined to trade here and here. And for that reason, that one-to-one was not met. Now, you could, if you're trading the open, you got balls. But this was also one-to-one for that bar. What have I done? Yes. Then let's see one-to-one for the pullback. What I mean by that is the one-to-one above the bar, 5 high. Okay, so one-to-one above the, wow, look at that. That's a one-to-one that adds up with the price action. Those are my favorite type of one-to-ones and targets that line up with price action. There's a one-to-one. So many ways to do one-to-one. Here, one-to-one. I did not take that, but I mean, we have a gap up, so I don't think that's the worst trade, but the context is bad. You're trading against a bearish breakout. So yeah, there's a one-to-one. Here's another one-to-one. Put it at the high of the pullback. Failed. Now we see 2021. One-to-one is met there. We see 23, 24, 25, 26. We see the rally. We see a gap, and we're happy. Like, yeah, we got a rally. We got a 4-bear micro channel. I'm getting in on the pullback. You buy this, and it's met. Bang. Bang, bang. So what I did, the way I traded this is I bought, I can't remember if I bought the low here or I bought this. I bought that, and then I saw this micro channel, so I bought this again, but I ran the new PT, and that's how I must have got billed to the tick, that one-to-one. I don't recommend going short above the EMA, but in range bound price action, shorts above the EMA are typically good spots. That was one-to-one price action. We go range bound. I'm trying to learn how to sit out during range bound price action because I was profitable here and I got cut up right here and then I made it back. I was at break even so that's kind of frustrating. I need to identify that a little bit better. And then we see this strong breakout. We measure before the 57. One-to-one is not met here. One-to-one is not met there. One-to-one is not met at all for this breakout. So let's figure out how can we have. We can go one-to-one to 55. That was met fairly quickly. I think that would be a good trade. You know what? Is one-to-one met? Almost there. So it's not quite there yet. But one-to-one to 55 is met. 62. This is just the opposite of how I trade. I just want to show you guys the different ways. So I'm trading one-to-one, wide stop. I'm not waiting for my stop to get hit, but the probabilities are in my favor. And if someone was to be a tight risk to reward trader, they would be looking for this, and they would have to get at least 2 times their reward. This is what Brad talks about when he shows us in the trader room, his Excel spreadsheet. It's also on YouTube. Some people have shown it. If you're going for a 2-to-1, excuse me, if you're going, how do I say this correctly? This is a confusing topic for me. if you're gonna go for 2 to 1, it's about to be a 40% trade. So 60% of the time you have to hit out, but the statistics work. If you go for 2 to 1, you'll make money 40% of the time. So if you're hitting these type of trades, you have to be getting at least 2 to 1. You can't be scalping out. I mean, scalp out if the trade's gonna turn around, but if the trade's going in your favor and you want to take profits, that's bad because if you're a risk to reward trader, you have to go for 2 to 1 to be profitable. I'm playing 1 to 1, so I have to go for 60% of my trades have to be winners. I have to have a higher hit rate, but I also have more information. I don't try not too much to talk about that because it's a tricky I get confused when we talk about numbers and trading. But just today, I had a little side lesson with someone and kind of explained probabilities from a different perspective. From the 40 to, if you're going for 2 to 1, 40, so you're going to be hitting out 60% of the time. They're tight risk reward. If you're going for 1 to 1, you have to win 60% of your trades. That's the sentence I'm trying to say. I'm going to talk about the price action instead. So here we see 66 is a good bar. We want to get 1 to 1 of that. We wait for the pullback, deep pullback trading range. Short the high there, that's met. Short down here, that's met. 3-bar micro channel, 16.8, 670, 71, 72. I think it's late in the day. I don't think this is worth trading, but let's see. Yeah, 1 to 1 was not met. We went more sideways. The EMAs are lining up. So there you have it, guys. 1 to 1 for the day. The gaps are open there. Hope you guys had a good trading day. I had an easier time today than yesterday. And it was funny because yesterday was a pullback. I mean, yesterday was a bull rally, but the context was what I was having trouble with coming off this sell-off. 59 vacuumed up to this high, which is about 50% of the sell-off. So math is all lining up. Once we all have a systematic way to trade that lines up with the probabilities, that lines up with the math, all we have to do is repeat the system every day. Whether that be within a trend, that be in a trading range. Trading range, our edges around the extremes. Trends, we go with the trend. Sometimes we're forced to buy high, sell low. Anyways, guys, if you learned something, share the show. I appreciate your support. Thank you, everyone, for talking to me in the Discord. I know it's quiet sometimes, but you guys are hitting me up. I really like talking to you guys. I hope we all make money next year. I'm definitely kind of putting the cap on this year and getting ready for next year. Hope you guys learned something. Share the show if you did. Hit the share button. I'd really appreciate it. Tell your friends. Have a good one, guys. I'll talk to you later. Bye.